Okay, so we will start now. Our topic for today is profit or loss prior to incorporation. Our topic is profit or loss prior to incorporation. Suppose there is a company, R and Company. There is a firm called R and Company. There is a firm called R and Company. It is taken over by a private limited company. A firm R and Company is taken over by a private limited company. 1st April 22 is the date of takeover. 1st April 22 is the date of takeover. But this company, limited company, was incorporated on 30th June 2020. That is called date of incorporation. The date of incorporation is 30th June and 31st March 23 is year ending date. 31st March 23 is the year ending date. Private limited company acquired R and Company from 1st April 22. However, the date of incorporation is 30th June. This period is called pre-incorporation period. The date of takeover till the date of incorporation, this period is called pre-incorporation period. And from the date of incorporation till the year ending date, this period is called post incorporation period. This period will be called post incorporation period. So what is the topic all about? The topic is finding out what is the profit of the pre-incorporation period and what is the profit or loss of the post-incorporation period. The topic is to find out what is the profit or loss of pre-incorporation period and what is the profit or loss of the post-incorporation period. Okay, your question will be, there are other simple ways why we are learning this chapter. One method is to close your books on 30th June only. What this company will do, R and Company, it will close the books of account on 30th June. So therefore from 1st April to 30th June, they will prepare their own trial balance, P&L account, balance sheet, and from 1st July to 31st March, this company will prepare its own P&L account, balance sheet, trial balance, etc. So there will not be any problem. If you can close the books on 30th June, then your task is simple. You will be able to identify pre-incorporation and post-incorporation period profit. Okay, but suppose you cannot close your books, it's a running business, business is not stopped, you will have to continue with the same books of account. And if you continue with the same books of account, then the need to identify the profit earned in pre-incorporation period will arise. Now the issue is, why do we need to know the profit earned in the pre-incorporation period? The logic is, a company is born, a company takes birth on the date of incorporation. Before that date, the legal existence of company does not come into picture. Therefore, any profit or loss earned prior to incorporation will be called capital profit. It is not revenue profit. And any profit earned after the incorporation, post incorporation, is called revenue profit. Revenue profit. Now, what is the difference between the two? The difference between the two is capital profit cannot be distributed as dividend. So, our topic is to find out how much is capital profit, how much is revenue profit. This is the small topic. Capital profit means pre-incorporation profit. Capital profit means pre-incorporation profit. This cannot be distributed as dividend. This cannot be distributed as dividend. And revenue profit means post incorporation profit. Profit earned by the company after it was incorporated. Profit earned by company after it took birth legally. And this profit can be distributed as dividend. This profit can be distributed as dividend. If the company can close the books of account on the date of incorporation, then this chapter is really not required. But this chapter will be required in case if the company takes over a proprietorship or a partnership firm, gets incorporated later, then I need to divide the profit for the year into pre-incorporation and post-incorporation period profit. Okay. So, now next issue will arise, how to allocate profit. How to allocate profit. So, here we will follow some important points. How to allocate profit. The business was being done for the entire 12 months. So, how to allocate profit? We will note down some of the important points about this chapter, and that will really be useful to you. The question is how to allocate the profit. So, you will note down. I am going to give you a long list of how to allocate the profit. First is on sales basis. How to allocate profit, revenue or expenses on sales basis. Company has earned the profit for the whole year. There will be some expenses which will vary with the sales. So, any example of profit which will vary on the basis of sales? Give me example of profit which will or expense which will vary with the sale. I will give you one example. Sales commission. Sales commission. Another example. Bad dates. Another example. Advertisement or sales promotion expense. These are the examples which will vary with the sales. Some students have given packaging charges as an example. That is also okay. Is it right? So, most of you have given advertisement as an example. I sincerely and fully appreciate. Second thing you write down, some expenses will be allocated on time basis. Some expenses will be allocated on time basis. So, now you will give me the answer on which which expenses or income will be allocated on time basis. In example, which income or expenses will be allocated on time basis. I will give you one example and then you can give me some more example. Salary is right. Then the student is giving an example of rent. Then office administration. Office administration. Then you can also say rates and taxes. Property taxes. They are called rates, property taxes, municipal taxes. Then you can say telephone. Telephone. One student has given the answer insurance. Very good. Then one person has given the answer electricity. One person has given the answer depreciation. Right. Okay. So telephone, postage, depreciation. Now, sometimes the institute writes in the question miscellaneous expenses or general expenses. This can also be allocated on time basis. Yes, one student is asking about printing and stationery. So the student can assume printing and stationery can also be allocated on time basis. Okay. Then only to pre-incorporation period. Only to pre-incorporation period. Some expenses cannot be allocated to post-incorporation. They can be allocated only to pre-incorporation period. For example, interest paid to vendors. Interest paid to vendors. Okay, they can be allocated only to or interest paid on capital to partners. Interest paid on capital to partners. If a partnership firm is converted into company, so before the incorporation, we will call it interest paid on capital to the partners. Okay. One more thing you write down, only to post incorporation period. Only to post incorporation period. Student will answer now, which is allocable only to post incorporation period. So somebody has said preliminary expenses. Preliminary expenses or company's formation expenses. You are right. Any other answer? Very good. One student has said director's salary, director's fees or salary. Very good. Then dividend. Okay, dividend paid by the company. Dividend paid by the company. What about interest on debenture? Debenture interest. Interest on debenture will come. Remuneration to director will come. You are right. Remuneration to director will come. Share issue expense will come. So I will write down some more item here. Share issue expenses will come. Remuneration to managing director will come. Remuneration to managing director will come. Discount on issue of securities will come. Discount on issue of securities will come. Okay. These are some of the examples of only post incorporation period expenditure. Now the next issue is treatment of audit fees. Treatment of audit fees. Now here you will write down for company's audit. For company's audit. Because under Companies Act, the books of account are required to be audited by a statutory auditor, fully applicable to post incorporation period, fully to post incorporation period. What about tax audit under Income Tax Act? All of you have studied or will study Income Tax Act. Under Income Tax Act also, a company whose turnover exceeds a certain limit is required to perform tax audit. So what about such companies? Before the incorporation also, a company is subject to tax audit. After the incorporation also, a company is subject to tax audit. So therefore, our institute have said it should be apportioned on the basis of turnover. It should be apportioned on the basis of turnover. Or this is the suggestion of ICAI. So if your question says company audit, you will allocate to post incorporation period. If your question says tax audit, you will allocate in the ratio of sales. Now your question is silent. Third situation in the question would be, the question is silent. What should be the ratio? You can take sales ratio and write a note. If the question is silent, you will take audit fees in sales ratio and write a note. So please make this chart for treatment of audit fees. Have you done? Yes. So I hope all of you have completed this. Let us go to the next discussion now, and that is gross profit. Gross profit will be allocated in the ratio of sales. Gross profit will be allocated in the ratio of sales. Taking into account any price change, gross profit will be allocated in the ratio of sale usually, but the question may say that the price level has changed. The price in the post incorporation period was 10% higher than the price in the pre incorporation period. In that case, one has to also take into account the changes in the price level if applicable. And what about cost of goods sold? So cost of goods sold also allocate on the basis of sales. Cost of goods sold allocated on the basis of sales. Next point, write down. Next point is interest on purchase consideration. Interest on purchase consideration. When you are buying a business, you have to pay purchase consideration, and purchase consideration will be payable to the vendor. You may have borrowed money to make the payment of purchase consideration. How will that interest on purchase consideration be treated? Okay, so if the interest is paid from the date of takeover till the incorporation date. If the interest is paid from the date of takeover till the incorporation date, we will fully allocate to pre-incorporation profit. Fully allocate to pre-incorporation. And interest paid from, or you can say after the date of incorporation, interest paid after the date of incorporation. Yes, this time you will answer. Interest paid after the date of incorporation. Where will you transfer it? Interest paid after the date of incorporation, we will transfer to post incorporation period. Interest paid after the date of incorporation, we will transfer to post incorporation period. Is it right? So this is about allocation of various income or expense. And as we will solve the problem, you will come across different situations and accordingly will handle those situations. Your query will be, what about say for example carriage inward. Suppose I ask you carriage inward. Where will you allocate carriage inward? Pre or post? Or in certain ratio? Carriage inward is linked to purchases. So you can write down carriage inward in the ratio of purchases. Bring a notebook, pen, pencil, calculator. What about carriage outward? Carriage outward is for dispatch of goods, sale of goods. So for carriage outward, fill in the blanks in the ratio of dash. Carriage outward in the ratio of dash. So one student has said sales, very good. Sales is right. Raj Singh 07, sales is right. Okay, so these are few examples. Read the problem very carefully and then accordingly solve the problem. Suppose you are given in the same problem date of incorporation. Student will have to reply now. Date of incorporation is 1st July 2022 and date of certificate of commencement of business, that is the date from where the company can get or start doing business, is called certificate of commencement of business. That date is 1/9/2022 and the date of takeover is with effect from 1st April 2022. Now the student will ask a question, answer a question 1/4/22 to 1/7/22, 1/9/22, 31st March 23. Date of incorporation pre-incorporation period. What is pre-incorporation period? What is pre-incorporation period? Tell me whether pre-incorporation period will be option A 1/4 to 1/7 or option B 1/4 to 1/9. Yes, you will write either A or B. You will write either A or B. So many students have answered A. A is the right answer. Date of incorporation is the date when company comes into existence. Date of incorporation is the date when the company comes into existence. So company's legal birth takes place here. Legal birth. Company has born. Getting the certificate of commencement is a formality. Getting certificate of commencement is just a formality, not important. Is just a formality. Getting certificate of commencement is just a formality. So ignore that date. In some question we will come across two dates. Date of incorporation, date when certificate of commencement of business was issued. The student will ignore date of certificate of commencement of business. Company's birth take place on the date of incorporation. That is the date company has already come into existence. Hence, for the purpose of bifurcating the current year profit into pre and post allocation period, you will take date of incorporation as the dividing line. From date of takeover to date of incorporation, you will take it as pre. From date of incorporation till the reporting date, year ending date, you will take it as a post incorporation period profit. Okay, so this point I hope you have noted down somewhere. This I will require in my lecture. Okay, so can I erase this now? Yes. Next point is treatment of profit or loss prior to incorporation. Treatment of profit or loss prior to incorporation. So I am very happy that many of you are participating and sincerely replying. If it is profit, it is a capital profit, not a normal profit, because this profit was earned when the company was not in existence. This profit was earned when the company was not in existence. So when the company is not in existence, how can it earn profit? Hence it is called capital profit. It is transferred to capital reserve. It is transferred to capital reserve. Once it is transferred to capital reserve, dividend cannot be paid. Dividend means sharing of profit. Dividend cannot be paid. Dividend cannot be paid. But what if there is a loss? What if there is a loss? What if there is a loss? Loss in the pre-incorporation period. You can debit goodwill. You can debit goodwill because it is the cost of business acquisition. It is the cost of business acquisition. It is the cost of business acquisition. When you acquire a business, there is a cost involved. So if you are getting a loss in the pre-incorporation period, it is also a cost of business acquisition, and therefore that is adjusted in goodwill. Or what you can do, or you can adjust in capital reserve. Suppose you already have capital reserve. Suppose you already have a credit balance in capital reserve. You can debit that capital reserve. But this capital reserve you will debit only when you already have an existing capital reserve. So the second option is you can utilize any capital reserve. So capital loss will be adjusted against any capital reserve. But if you don't have capital reserve, then you can adjust it in goodwill. So this is how the loss prior to incorporation will be treated. Okay. So this is for the theory part. Now we will start with the questions. Okay. Now we'll start with the questions. So I am sure you have the question paper with you. Do you have the question paper with you? One student is asking if the company is coming into existence now, how it will have capital reserve. Capital reserve may be due to business acquisition. Capital reserve can be due to business acquisition. I will show you how it can have capital reserve. How it will have capital reserve. Suppose A Limited, good question, intelligent question. A Limited acquires Messrs. A and Company, a proprietorship firm. Okay. Asset acquired. So those who have asked this question, they will pay attention. How can a company have capital reserve? Capital reserve, asset acquired 10,000 rupees, agreed. Liabilities acquired. When you acquire a business, you acquire their assets and liabilities. Assume liabilities acquired 5,000. So what is the net asset acquired? Very intelligent question. What is the net asset acquired? Net asset acquired is 5,000. And what is the consideration paid? Suppose the consideration paid is 3,000 rupees. Suppose the consideration paid for acquiring the business is 3,000 rupees. So if I have to record this in my books, it will be recorded as follows. Journal entry for recording the takeover of business. Assets account debit. I have acquired assets of 10,000. This they will not write in any book. In all the books, in your study material or any available book, they have simply mentioned adjust it in capital reserve or goodwill. Let us see why. You are going to credit liabilities taken over. Liabilities taken over 5,000. And you are going to credit bank account for consideration paid 3,000 rupees. But still your entry is not tallying, which means the balance is capital reserve 2,000 rupees balancing figure. So if you already have this 2,000 rupees, then capital reserve of loss of pre-incorporation period can be adjusted against this capital reserve. Can be adjusted to this capital reserve. Okay. So that was your query. How can we have capital reserve? Capital reserve will arise when a company pays purchase consideration less than the net asset taken over. And in that case, if you have a loss in the pre-incorporation period, that can be adjusted against the capital reserve. Okay. So now I am going to give you a question. Write down question. Write down one question. This question is from July 2021 exam for 4 marks. So I will dictate the question also. Please write down. Those who want to write down in the notebook. S Limited was incorporated on 30th November. S Limited was incorporated on 30th November 2020 to take over the running business of proprietorship firm to take over the running business of proprietorship firm of Mr. S. The various expenses debited to profit and loss account for the year ended 2020-21 were were so now they have given a list of various expenses. So under that you write down 3 columns. You will draw serial number, particulars, and basis. This basis column you have to complete. First I will give you the question and then you will participate in answering. First is director's fees. Second is preliminary expenses. Please write down the question written off. Third, write down salaries and general expenses. Fourth, write down statutory audit fees. Student will have to later answer the basis of allocation. Point number 5, write down tax audit fees under income tax. Tax audit fees under Income Tax Act. Tax audit fees under Income Tax Act. 6 number, write down commission to. This is an exact exam question for 4 marks. Just have to write the basis of apportionment and you get 4 marks. Wonderful. Then write down 7 sale promotion expenses. Sale promotion expenses. Sale promotion expenses. Then 8th point is advertisement. All of you are writing in your notebook advertisement expenses. 9th number point is rent expenses. And 10th number point, the last one, please write down bad dates. This is the last, this is July 2021 exam question for 4 marks. And then you have to write down basis of apportionment. The question is, what is the basis of apportionment for pre and post incorporation period? Basis of apportionment between pre and post incorporation period. Okay. So first you will try and then we will check. Are you ready for trying this answer? So write down your own answer and then we will see how many of you get 10 out of 10. How many of you will get 10 out of 10? We will see. So write down the answer. Okay. Let us check the answer. Those who have done. Director fees post incorporation period. You can write only post or post incorporation period. Preliminary expenses written off post incorporation period. Salary and general expenses time ratio. Statutory audit fees we will fully allocate to post incorporation period. Tax audit fees sales ratio. Tax audit fees sales ratio. Commission sales ratio. Commission sales ratio. Commission to sales promotion expense against sales ratio. Advertisement sales ratio. Rent expense time ratio. And last one, bad dates. Bad debt is associated with sales ratio because bad debts on debtor. Debtor is related to sales. Okay. So this way we have just now completed one exam question. Okay. All of you have noted, say yes. Everybody has noted? Say yes. So can we go to the next question? Yes. Next question is from November 2020 exam for 4 marks. Are you ready to solve November 2020 exam? Say yes. This I am going to erase now. Write down one more question. Write down question from November 2020 exam for 4 marks. Question from November 2020 exam for 4 marks. Right? So I am going to dictate the question. The question is, Moon Limited was incorporated on 1st August 2019 to take over the running business of a partnership firm with effect from 1st April 2019. With effect from 1st April 2019. The summarized P&L account for the year ended 31st March 2020 is as under. So now they have given you a P&L account which has 2 columns. So you will write gross profit. Gross profit given is credit column In credit column, write down 6,30,000 less. Now they have given you long list of expenses. Long list of expenses. Salaries 1,56,000. Rent 72,000. Commission on sales. Commission on sales. Commission on sales 40,600. Depreciation 60,000. Interest on debenture. Interest on debentures 36,000. Director's fees is 24,000. Advertisement is 48,000. And the total of these expenses is 4,36,600. And now they have given you net profit. Net profit is 193,400. So this is the P&L account. 193,400. Okay. 193,400. Now there is a question below. Write down below this P&L account, write down this question. Moon Limited initiated an advertising campaign. Which resulted in increase in monthly sales by 25% post incorporation. Moon Limited initiated an advertising campaign which resulted in increase in monthly sales by 25% post incorporation. So sale in 1 month in post incorporation period is 25% more than the sale per month in the pre incorporation period. So this will affect my sales ratio. So the question is, you are required to prepare a statement. Showing the profit for the year between pre-incorporation and post-incorporation. So this is the question. So in this question, first I will have to do two things. First, I will have to find out the time ratio, and then I have to find out the sales ratio. Certain items will be directly transferred to the post incorporation period profit. Is it right? So I hope you have written the question. One student is asking why tax audit is in the sales ratio, because tax audit is based on the total turnover of the company. So if the turnover exceeds a certain limit, it has to pay, it has to get its audit done under the Income Tax Act. Even if a company, even if it is a proprietorship firm or a partnership firm, they are also subjected to tax audit. They are also subjected to tax audit. So therefore, tax audit will be allocated in pre and post in sales ratio unless other basis is given. So I hope you have noted down the question. So can we start solving the problem? Say yes or no. Can we start solving the problem? Yes, we can start solving. So what you do? So first you write down step 1. Step number 1. We will prepare time ratio. Step number 1, we will prepare time ratio. After writing the time ratio, you will write point number A. Presentation is very important. Pre-incorporation period. Every time I will write like this. Pre-incorporation period is 1st April 1st April 2019 to what is the date of incorporation? Date of incorporation is 1st August. So can I write for 31st July 2019? That is 4 months. That is 4 months. Point B, write down post incorporation period. This is the presentation we will follow. Post incorporation period is 1st August 2019 to 31st March 2020. 31st March 2020, and that is called 8 months. 8 months. Therefore, in the center of the page, therefore, time ratio is equal to 4 is to 8, or you can say 1 is to 2. Is it right? Time ratio 4 is to 8 or 1 is to 2. So those expenses which are connected with time, which varies with time, like in your question it is rent, salary, depreciation, they will be allocated in the ratio of time pre 1 post 2. Step 2, write down sales ratio. Sales ratio. First chance will be given to the student to try, and in order to try, I will give you a hint. This line is a hint. Moon Limited initiated an advertisement campaign resulted in increase in monthly sale of post incorporation period by 25%. So student will try and give me the ratio, pre and post ratio for sales. Pre and post ratio for sales. Pre and post ratio for sales. Please try. Anybody? One student is answering 1 is to 1.25. Is it 1 is to 1.25? One more student is saying 1 is to 1.25. Try. One student is saying 2 is to 5. 2 is to 5. 2 is to 5 is the right answer. Okay, so those who have said 2 is to 5, congratulations, you are a brilliant student. Okay, your probability of passing intermediate exam is very high. Happy? The one who said 4 is to 5, I think is not right. So let me try. Let me try. There is one long cut and one short cut. What should we do? Long cut or short cut? So first I will try long cut. First we will try long cut. In long cut, what you will do? You will write two columns on the right side, pre, post. In long cut. So please write down. Write down those 12 months. April, May, June. There is a shortcut also. I will tell you after this. July, August, September, October, November, December, January, February, March. Okay. These are the 12 months of a year. Out of these 12 months, April, May, June, July. April, May, June, and July will fall in the pre-incorporation period. Let us assume the sale of the pre-acquisition period, pre-incorporation period is 1 per month. So I will write 1, 1, 1, 1. 4 months. 1, 1, 1, 1. You can write X, 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 X also. And what about the post-incorporation period? So the question says on the screen, right side, question says the sale in the post-incorporation period was 25% higher than pre-incorporation period, monthly sale. So now you will write, if it is 1 here, post-incorporation will be 1.25. 1 plus 25% of 1 is 1.25. So you will write 1.25, 1.25 times. 8 times. 8 times write down 1.25. 8 times. Noted? Now tell me the total. This is 4. This is how much? I think 10. Total of post is 10. Correct? So you will write the total 4 and 10. This is the ratio. Therefore, sales ratio, if you simplify this, it will become 2:5. It will become 2:5. 4:10 is right, 2:5 is right. This is sales ratio. Did you enjoy the long cut? Tell me yes or no. Did you enjoy the long cut? It seems you have not enjoyed. So now write down shortcut. Sales ratio. Sales ratio shortcut now. And you will follow this shortcut for exam purpose also. No problem. Right hand side 2 columns. Pre-incorporation, post-incorporation. Pre-incorporation, post-incorporation. First you write down time ratio. Time ratio was how much? Time ratio was 1:2. Time ratio was 1:2. And then you multiply the sales. Sale is 1 rupee per month. Sale is 1.25 per month. Sale is 1 rupee per month and sale is 1.25 per month. Now you multiply. That is sales ratio. Sales ratio multiply 1 into 1 is 1. Let me call it point number A, point number B, point number C. So sales ratio, you'll have 1 into 1, 1, 2 into 1.25. How much is that? 2.5. Or you can write, if you don't want to write fraction, you can write 2:5. You can write 2 is to 5. So this is simple. Any other way also you can present, you will be given full marks. Finally, your answer must be 2 is to 5, 4 is to 10, or 1 is to 2.5 is also okay. So these two working notes I need to prepare before I start the problem. Is everybody ready with these two working notes now? So in my question, we have three types of problem adjustment. Some expense on time ratio, some expense on sales ratio, and some expenses given will be fully charged to post incorporation period. Gross profit will be allocated in the ratio of sales. Is it right? So I hope you have noted down this. We are ready for the main answer. So write down main answer, step 3. That is step 3. Statement showing calculation of profits. Statement showing calculation of profit for pre and post incorporation periods. Statement showing calculation of profit for the pre and post incorporation period. So write down serial number, particulars, and then we will have basis of apportionment, then you write here pre, post, total. So presentation is important, and here you will write down figures in rupees, figures in rupees, figures in rupees. So once you are ready with the format, tell me. We will require almost 15 lines, 10 to 15 lines we will require. So tomorrow you will keep the scale, pencil, eraser, calculator ready. Question I have dictated. First you will write down A, income. Under income we are given only one item, and that is gross profit. There is only one item in income, and that is gross profit. So gross profit basis of apportionment will be sales ratio, and sales ratio is 2 is to 5. Sales ratio is 2 is to 5. Gross profit total column 6,30,000. Gross profit total column 6,30,000. Now you will tell me how to divide that 6,30,000 in the ratio of 2 is to 5. In the ratio of 2 is to 5. Sales ratio is right. Amount. Tell me the amount. So check the answer. Is it 1,80,000 and 4,50,000? 1,80,000 and 4,50,000 is right. Very good. And do you have any other income in this problem? No. So you draw a line, take a total. There is no other income. Remaining items are expenses. Remaining items are expenses. So this is your total income. Part B of the answer will be expenses. Part B of the answer will be expenses. Okay. Now under expenses we will write first salaries. Salary basis, write down time ratio. And time ratio is 1 is to 2. Time ratio 1 is to 2. And the salary total is 1,56,000. 1,56,000. A portion in the ratio of 1 is to 2. So this is how much? 52,000. Is it right? And this is 1,04,000. 52,000 and 1,04,000. This is one. Second item given to you is rent. Time ratio. Last column total. Rent is 72,000. 72,000. So give me the division of 72,000 in pre and post. 72,000. 24,000. 48,000. Is right? Check. Then the next item is commission on sales. Commission on sales. Sales ratio 2:5. Commission on sale is 40,600 in the last column. A portion in the ratio of 2:5. 2:5. 11,600 and 29,000. Check the answer. 11,600 and 29,000. Yes, it is right. Next is fourth item is depreciation. Write down time ratio 1 is to 2. Total depreciation is 60,000. This I can also do easily. 20,000, 40,000, 20,000 and 40,000. Very good. Those who have given the answer, very good. One day I will give you some gift. Those who are answering, I will note down their names and then I will give you some reward. Interest on debenture. Interest on debenture. Pre or post? Time ratio or sales ratio? Post. Everybody is saying post. You people are highly intelligent student and you will only write in post column 36,000. 36,000. Then point number 6. See the presentation. Everything should be written. If you want full marks, you have to write full. Director fees. Where is director fees? Director fees. Post. Right. So director fees in post column 24,000. 24,000. Very good. Most of the student have said post. And point 7 write down. Advertisement. Advertisement. Anybody? Advertisement. To help you, I will give you the hint. Read this paragraph. On the screen, this Moon Limited initiated an advertisement campaign which resulted in increase in monthly sale by 25% post incorporation. After reading this note, you have to answer. When was advertisement cost incurred? Was advertisement cost incurred throughout the year or advertisement cost was incurred only in the post incorporation period? So the answer is on the screen, right side. The advertisement cost was incurred only in the post incorporation period, and that is why the sales in the post incorporation period has gone up. Okay, hence we are going to take it in the post period only. If this line was not there, yes, then we'll take sales ratio. But when some specific information is given, I will take that. So you will say post. Otherwise, it was a sales ratio item. How much is the advertisement? 48,000. Post column, total column. This is the correct format we will follow. Now tell me the total of point number B, expenses. Total of expenses pre column. Total of expenses pre column. Take 52,000 plus 24,000 plus 11,600 and plus 20,000, and that is equal to 1,07,600 total expense of pre period. Post period, try with me, 1,04,000 plus 48,000 plus 29,000 plus 4,000, sorry, 40,000 plus 40,000 and plus 36,000 plus 24,000 and plus 48,000. So this total comes to 3,29,000. So what is point number C? Net profit. Point number C, write down net profit. Net profit. A minus B. A minus B. In the pre-incorporation, how much is the profit? Pre-incorporation is 72,400. Post-incorporation is 1,21,000. Please check. Pre-incorporation 72,400 and post-incorporation is 1,21,000. Is this right? Okay. Close this table. All of you draw one line and close this format. Below this format, I have to write two notes. Okay. So this is the answer. Everybody first check. Okay. I will give you some time to check your answer with my answer. Have you completed? Write down note 1. Note 1. Pre-incorporation profit. Pre-incorporation profit will be transferred. Pre-incorporation profit will be transferred to capital reserve. Note number 1, pre-incorporation profit will be transferred to capital reserve. And note number 2 write down. Note number 2 write down. Post-incorporation profit is revenue profit. Is revenue profit and can be used for dividend purpose and can be used for dividend purpose and can be used for dividend purpose. So this is the answer of this question. So one student is asking, can you repeat the sales ratio again. Okay, so I will try again sales ratio. So first you understand there are 12 months in this problem. Once again I will explain sales ratio. First understand the long cut, then you can understand the shortcut. April, May, June, July. This is pre-incorporation period. August, September, October, November, December, January, February, March. So I am explaining sales ratio again. You are not required to write down. Now the problem says, I will go to the question. Look at this paragraph on the right side which is highlighted. Moon Limited initiated an advertising campaign which resulted in increase in monthly sale, underline monthly sale, by 25% post incorporation. Which means if sale is 100 rupees in pre-incorporation per month, the sale is 125 rupees post incorporation. So what I'll do, to make your task easier, let us assume sale is 100 rupees in the pre-incorporation period. Sale is 100 rupees per month in the pre-incorporation period, and sale will be 125 rupees per month in the post-incorporation period. So this is the total sale. This is 400 rupees and this is 1000 rupees. So the ratio is 4:10 or 2:5. 4:10 or 2:5. So I hope you have understood. If you have understood, just tell me that yes, you have understood. We can go to the next question after this. Have you understood? So we'll go to one more question, which is from our notes. So come to this question number 2. Come to this question number 2, which is there in the notes. All of you open this page in your notebook. If you don't have printout, then you can just read it from the screen. Question number 2. Please read. All of you read question number 2. And if you have the printout with you, you can read from your printout. So now I will read the question and you will pay attention. Subhash Limited was incorporated on 1st March 2010. Subhash Limited was incorporated on 1st March 2010. Underline the date of incorporation. Everybody, 1st March 2010, and received the certificate of commencement of business on 1st April. This is not important. Only date of incorporation 1st March 2010 is important. The company bought the business of Messrs. Small and Company with effect from 1st November 2009. Again underline, 1st November 2009, underline, that is the date of takeover of business. That is the date of takeover of business. Concentrate. 1st November 2009, date of takeover of business. 1st March 2010, date of incorporation. Please tell me, what is the pre-incorporation period in months? How many months are there? November, December, January, February, 4 months. So there are 4 months in the pre-incorporation period. Now let us read further. From the following figures related to year ending 31st March 2010, this is the year ending date, underline year ending date 31st March 2010. So student will again count from 1st March to 31st October 10 is the post incorporation period. How many months are there in post incorporation period? 8 months. Very good. Find out the profit available for dividend. Find out the profit available for dividend means you have to find out post incorporation period profit. Post incorporation period profit. Now they are saying sales for the year was 6 lakh, out of which sales up to 1st March was 2,50,000. Sales up to 1st March 2010 is 2,50,000. So please answer what is the sales after 1st March. What is the sales after 1st March 2010? 6 lakh minus 2,50,000. That is 3,50,000. So the ratio of sale this time is 2,50,000 in the pre-incorporation and 3,50,000 in the post-incorporation. 2,50,000 is to 3,50,000. That is the ratio. Very good. 2,50,000 is to 3,50,000. The ratio becomes 5:7. Sales ratio is 5:7, and I will explain it again while writing. Gross profit for the year is 1,80,000. This gross profit will be allocated in the sales ratio. And now expenses debited to P&L account were, these are the expenses: rent, salary, director's fees, interest on debenture, audit fees, discount on sale, depreciation, general expense, advertisement, stationery and printing, commission on sale, bad debt. Underline bad debt. Rupees 500 relates to debts created prior to incorporation. Total is 1,500. 500 is prior to incorporation. So 1,000 is after incorporation. If 500 is before incorporation, 1,000 is after the incorporation. And then they have written interest to vendor on purchase consideration up to 1st May, 3,000. Up to 1st May, underline. Up to 1st May. Our date of acquisition is 1st November. 1st November 2009. Date of incorporation is 1st March 2010. And this interest is paid up to 1st May 2010. What do you understand? This period and this period. This line which I am drawing right now, line which divides the profit in pre and post. So this is pre, this is post, this is 4 months, and this is just 2 months, because the interest was paid up to 1st May only, not for the full year. So first 4 months will fall in the pre-incorporation period, 2 months will fall in the post-incorporation period. So in this problem, interest paid to vendor on purchase consideration will be allocated in the ratio of 4:2, specifically given. So I will have to follow the specific instruction. Is it right? So one student has a query on sales ratio. I will explain while writing the answer. Okay, don't worry. Is this question clear? So we'll have to write down the answer. First write down step 1. Very easy question. Time ratio. Time ratio you will write down in the next line. Pre-incorporation period is 1st November 2009 to 1st March 2010, that is 4 months, and post incorporation period is 1st March 2010 to 31st October 2010, that is 8 months. That is 8 months. Therefore, time ratio is equal to 4 is to 8. Time ratio is equal to 4 is to 8. Step 2. Sales ratio. Now the student who has asked sales ratio query will pay attention. Sales ratio. Sales during pre-incorporation period. Sales during pre-incorporation period is 2,50,000. It is given. This is given in the question. Agreed? Yes or no? And sales during post incorporation period is equal to total sale for the year is 6 lakh minus 2,50,000. So that is equal to 3,50,000. Therefore, sales ratio is 2,50,000 is to 3,50,000, or we can call it as 5 is to 7 for simplicity purpose. 5 is to 7. Is this right now? Sales ratio. In this question, we don't require purchase ratio because directly gross profit is given. Directly gross profit is given means what is gross profit? Sale minus cost of goods sold. And what is cost of goods sold? Opening stock plus purchase minus closing stock. So gross profit is the net effect of 4 numbers: opening stock, purchase, closing stock, and sales figure. So we will start with gross profit figure directly. Okay. Any other query? If you don't have a query, let us write down step 3. Keep the calculator ready and you can start answering also. Statement of profit and loss for the year ended 31st October 2010. For the year ended 31st October 2010. Is time ratio 1 is to 2? Yes, you can write 1 is to 2. Very good. 4 is to 8 or 1 is to 2 is welcome. Sometimes students give us good ideas. So this is my heading, and now we will draw the format. Serial number, particulars, basis of apportionment. basis of apportionment. Yes, 5 is to 7 is right. Mohini ji, 5 is to 7 is right. Sanket ji, 5 is to 7 is right. You are a good student. Then write down pre-incorporation, post-incorporation, or just write down pre and post. Total. Total. Okay, you will help me with the answer. First, you write down point number A, income. Point number A, income. Under income, write down gross profit. Basis of apportionment, sales ratio. Sales ratio is 5 is to 7. Sales ratio is 5 is to 7. And the gross profit is given in point B. Gross profit is 1 lakh 80,000. Please write down in last column 1 lakh 80,000. Now 1 lakh 80,000 into 5 divided by 12. So how much you are getting? 75,000 and 1 lakh 5,000. Very good. Draw one line. Take the total. You can start answering the next one also if you have done. Point number B, expenses. Under expenses we have a long list. Rent. Rent I will apply time ratio. 1 is to 2. 1 is to 2. Time ratio 1 is to 2. Rent is 9,000. Rent is 9,000. 9,000 allocate. 1 is to 2. 9,000 into 1 by 3. Is it 3,000? Is it 6,000? Yes. Salaries. Next item is salaries. Salary is time ratio. 1 is to 2. Total salary 15,000. 15,000 into 1 by 3. I think 5,000. 10,000. Next item, write down director's fees. Director fees you write down post. 4,800. 4,800. Interest on debenture. Interest on debenture, write down post. 5,000. Total 5,000. Post. Very good. Raj Singh, very good. Jyoti, very good. Tarun, very good. And then audit fees. Audit fees, nothing is given. Take sales ratio and write a note. 5 is to 7. How much is audit fees? Is 1,500. 1,500 into 5 divided by 12. 625. 625. And what about the post column? Post column, check 875. Is this right? Yes. Many students have answered. Tarun has answered. Sakshi, Jyoti, you are right. Enjoy. Now next item is disco on sales. Disco, no, discount. Sorry, my mistake. It is not disco, it is discount on sale. and ratio will be sales 5:7, and the total amount is 3600. So please help me, 3600 into 5 divided by 12 is 1500, and in second column 2100. Very good. Then we have depreciation. Depreciation time ratio 1 is to 2. 1 is to 2. Depreciation is 24,000. Divide by 3, 8,000 and 16,000. Depreciation is right. General expenses. General expenses are time ratio 1 is to 2. Total is 4,800. 4,800. Allocate in the ratio of 1 is to 2. 1,600 and 3,200. Correct? Yes, very good. Jyoti, Sakshi, Jaswant, Tarun, you people are genius. I will give you some reward if you keep answering like this. Then write down advertising. This time nothing is mentioned about advertising. Take sales ratio 5:7. Total is 18,000. 18,000 divide in the ratio of 5:7. 7,500 and 10,500. Is this right? Advertising sales ratio. Stationery and printing. Stationery and printing time ratio. Stationery and printing, we will assume time ratio 3600. 1 is to 2. 1200, 2400. Commission on sale. Commission on sale sales ratio 5:7. 5:7. What is commission on sale? 6,000 rupees total. 6,000 in total column, and 6,000 into 5 divided by 12, 2500, 3500. Sales ratio. Bad dates. 500 is related to prior to incorporation period, which means 1000 is related to post period. 1000 is related to post period, and 1500 is total. So here you write down in basis column specific. Specific. Noted specific. And now there is only one item, that is interest to vendor. So can I go to the next page now? Yes. Next page I will go because I don't have space. So next point is interest to vendor. I will write 4:2 ratio. 4:2. Pre-incorporation period is 4 months here, and post-incorporation period is only 2 months. The total period covered is 1st November 2009, 1st November 2009 to 1st May 2010. That is 6 months. And out of that 6 months, 4 months will fall in the pre-incorporation and 2 months will fall in the post incorporation. So it is 4:2. Anybody answer? Is it 2000 rupees and is it 1000 rupees? Yes, you are right. Now it is over, almost over. So you will give me total of expenses in pre-column. Total of expenses in pre-column. So you will take the total of 3000 plus 5000 plus 625 plus 1500 plus 8000 plus 1600 plus 7500 plus 1200 plus 2500 plus 500 and plus 2000 equal to. So this comes to 33425. Just check, is it 33425? 33425 is right? Yes. Many students got it. Now let us try the post incorporation together. Type 6000 plus 10,000 plus 4800 plus 5000 plus 875 plus 2100 plus 16,000 plus 3200 plus 10,500 plus 2400 plus 3500 plus 1000 and plus 1000 equal to. So how much did you get? Total of the post column. Total of the post column 66375. 66375 is right? Yes. Those who got it right, very good. I will read your names who got it right. Sakshi and some more students. Okay. Sumit, Jyoti, Raj Singh, Jaswant, Thanga. Thanga, you are wrong. Then Falak Mehta is right. These many students got it right. Point number C, net profit. Net profit. So how do you get net profit? Take 75,000 and minus 33425. 41575 is pre-incorporation. Correct? Try post now. Type 1,05,000. Type 1,05,000, which is gross profit minus total expense 66375. 38625 is right. 38625. Everybody got it. Those who got it right, very good. Congratulations. So 38625. Close the table. Close the table and we'll write down notes. Write down notes. Note, write down pre-incorporation profit. Pre-incorporation profit will be transferred to capital reserve. Will be transferred to capital reserve. Next note, post incorporation profit is revenue profit. This was your question. Post incorporation profit is revenue profit and it is available for dividend distribution, and it is available for dividend distribution. Then note 3 write down, in the absence of specific information, in the absence of specific information, audit fees is apportioned in sales ratio. 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 And one note number 4 write down. Note 4, date of certificate of commencement of business, date of certificate of commencement of business is not relevant because the company comes into existence on the date of incorporation itself. Company comes into existence on the basis of the date of incorporation itself. Is it right? So this is the answer of this question. Okay. So I hope you enjoyed today's lecture. Thank you very much. See you tomorrow. All the best. Keep the printout ready. Okay. And we can enjoy the lecture tomorrow without any hiccups, and it will start at the same time. All the best. Bye.